And one of the things for me is time freedom now rather than just later on when I'm a little bit older. So I wanted to make a video specifically for you. I thought about what type of value I could bring and what I wish I would have known many, many years ago when I started investing, because it's a complex world out there, and my goal on this channel is to make investing simplified. Now, everyone's investing journey will be different, specifically based off of your goals, but there are a couple of key things that I definitely wish I would have known. Also, guys, I am so excited because I finally said yes to my first partnership. I'm all about bringing you top-notch, highly researched investment ideas, and today's video sponsor is Masterworks, but more on that later. Number one on my list of things that I wish I knew when I started investing is just to start simple and safe. This is pretty much what this whole channel is all about. Investing can get very complex, and so to start, pick an ETF or mutual fund that tracks a broad index and has low fees. My favorites are VU or VTI in this category. You can put these in either a brokerage fund or a retirement fund like an IRA or a Roth IRA, but just keep it simple and get your foot in the door. By watching how this investment does over a period of months or even years, you can watch what the market does, how it tends to move based off of emotional things or news stories, and that'll help you with picking out other investments down the road. Number two, and I cannot stress this one enough, is the importance of an emergency fund. I know, super boring, but just stick with me. It's literally the secret sauce to why successful people are able to consistently invest when others can never find money to be able to invest with. So I personally have invested in certain companies or ETFs, and then randomly it drops like 20%. But I don't care because I don't need that money right then. I'm able to ride it out and let the market correct and come right back up and surpass that because I have a set amount of money set aside so that if anything ever happens, I can use that money and not have to pull the money out of the stock market at a time that I don't want to. That is key. This savings account is called an emergency account for emergencies. You don't know when it's going to happen, but I can guarantee that something is just going to happen. We have had to use our emergency fund multiple times, specifically for car stuff and for unexpected vet things with our dogs. That stuff gets so expensive. As you know, you only lose money in the stock market when you sell. So if that stock is down and you have to sell at the time that it's down, that means you will have to lose money to pull money out. Number three is what to focus on. And first I'm going to tell you what not to focus on, then I'll go into what to focus on. When you first get into investing, it's a whole new crazy world and everyone is telling you the best thing to invest in and that you need to invest in blah blah blah. Then you spend so much time researching this stock versus that stock versus that stock, hundreds of hours picking this stock or ETF. You're spending too much energy on something that's not worth it. If you have $1,000 to invest and after 50 hours of research and watching YouTube, you finally select ETF A, in 1 year, you should then have $1,110. Had you selected ETF B, you would then have $1,100. The difference between the two is not enough for all that time and energy you spent trying to decide which one to go with. As long as you're picking solid ETFs with low fees or solid blue chip companies that have been around forever and have a consistent, solid return, then just pick one or two and go for it. Spend that extra 50 hours that you were going to spend on researching between A and B on going out and making some money. What you need to focus on is something that's going to actually move the needle in your investing. Start a side hustle, something small. It can just be going to garage sales, buying something, and then selling it for much more. You could also start a solar washing company or wash people's windows or cars or mow lawns or Uber or Instacart. There's so many different ways for you to make money if you really want to. In the example before, you made about $100 to $110 with your $1,000 investment with either of the choices. If though you had $10,000 rather than $1,000 to invest, you would make either $1,000 to $1,100 on those same investments. So again, especially starting out, it's much less about this return versus that return as long as you're picking solid companies and ETFs, and more about getting more money in into the market. Number 4 is going to be one of my favorites, but before I go over this one, comment down in the comment section one thing that you wish that you would have known when you started investing. It'd be great for all my beginner investors to be able to look down in the comment section and learn something more than just what I'm saying, and hopefully it is different than something I'm saying so that we can have a wealth of information for all of you. Okay, so number 4 is basically just to get started. I hear all the time that somebody says, I only have $10 to invest and that's not enough. Yeah, $10 is enough, because $10 invested every single week into the S&P 500 or VOO that's returned an average of 10% over 40 years could grow to over $200,000. And the amazing thing about just getting started to invest is that it starts to grow very, very quickly, and it gets exciting very quickly. And when you actually start to see the power of this compound interest, you do everything you can to make it more than $10 that you're able to invest. And as you continue to learn new tips and tricks from subscribing to this channel, you're able to add even more gas to this investing fire, and it grows even quicker. 5th on my list is diversification, but not just diversification within stocks. This one is so key, and a lot of people are super understanding of the fact that you probably shouldn't just have only tech stocks. And so maybe you'll add something like some Home Depot or some Starbucks, and that's great. But what I'm talking about is making sure that you diversify within different asset classes, because what happens if the entire stock market just drops, like it has been lately? A secret is to diversify into different asset classes such as real estate, cryptocurrency, precious metals, and there's one that the ultra wealthy put record amounts of money into last year. Literally, they doubled their median investment in 2022, even with record losses in other markets. What asset are those mega investors so bullish on? Fine art. It's unusual, I know, but think about the low supply and high demand for iconic pieces of art. These artists literally make one-of-a-kinds, and that makes it so rare and so valued. Art consistently beats the returns of the S&P 500, especially last year when the S&P 500 actually lost over 20%. Art is valued in a different way than stocks and bonds, and so it's not correlated to what the stock market does. And if stocks and bonds drop, it could even increase demand for art as a potential store of wealth. We all know that traditional investments last year lost trillions of dollars, but one art investing platform successfully returned tens of millions of dollars to their investors. I'm talking about Masterworks, whose last 3 exits returned an incredible 10, 13, and 35% net. I've been looking for something to add to my portfolio that wasn't stocks or real estate or even cryptocurrency, and I've always known that art is incredibly lucrative, but I always thought I had to be insanely rich to drop $25 million on a certain painting. Until I found Masterworks, and I did so much research and I loved what I found, and I thought this would be a perfect company to partner with and to get you all some perks investing with this company. Masterworks is the first platform allowing you to add shares of iconic pieces to your portfolio. These aren't digital tokens, these are physical paintings, all SEC qualified, so you have confidence while you invest. The company actually owns the physical asset, and so you're basically buying a small piece of that asset and get to profit when the art appreciates in value. Masterworks is getting high recognition from very reputable places like the Wall Street Journal, and consistently CNBC, the New York Times, and even JP Morgan are educating people that alternatives like fine art are a great hedge against inflation, and are even calling the art market bulletproof, meaning that nothing can stop it. Over 617,000 people have already signed up, and offerings can sell out within minutes. My subscribers can claim a free, no obligation account today with the link down in my description. And other than investing in art or real estate or other physical assets, a great way to diversify, especially if you're a beginner, is to invest in ETFs or index funds rather than the individual company stock. Remember that if you have all of your eggs in one basket and something comes and steps on that basket, that's not good. So make sure to spread that money out. Number 6, I know you've heard this. I know you've heard to invest when the market drops. I know you've heard that millionaires are made in the bear market, but then the market starts to go south for a bit and everyone loses their mind and forgets everything they've been taught. The news and analysts scare everyone with their expertise and say that investing in stocks during a year like this year in 2023 is bad, but if you're investing long term, like 5 years from now, 10 years from now, 30 years from now, then this is absolutely the best time to be investing when that market's down because things are lower priced, which means it's on sale. Obviously, if it's a bad investment or something that's risky because it's not proven, then sometimes that's down because it's just a bad investment. So make sure you know the difference between something that's good and on sale and something that's just bad and probably something you should walk away from anyway. For those of you that are more seasoned investors, I hear you say things more like, I'll buy the dip, but I'm just waiting for it to dip even further. Bro, nobody knows exactly when that thing's gonna dip further or if it's gonna dip further, and all you're doing is keeping your money out of the market, and what you're basically doing is trying to time the market. I know you've heard it before, but it's important to understand that it's all about time in the market versus timing the market. I invest every single week, rain or shine, market up or down, and I don't care what the price is. I know 20 years from now, I'm gonna look back and be happy I did, because when I look at the price of the S&P 500 in the year 2000, I'm shocked and wish I could have bought 1,000 shares back then. Make sure you're investing in a solid ETF or index funds with low fees or very solid company blue chip type stocks, and then leave emotion at the door and just keep going. Now, number 7 is near and dear to my heart because it's something that I actually did and it was a super big mistake that I wish that I would have known 10 years ago for sure. And this is all about considering different life stages. When I started out, I was like you, watching a bunch of different YouTube videos and reading as many books and articles as I could. The thing that fascinated me the most was compound interest. As it should. It's the thing that's going to get you the most wealthy, probably by far. And the power of compound interest is all about how much time you give it to let it do its thing. And so for me, investing was just, okay, I'll put money in now, and 40, 45 years from now, that's when I'll get it, because that's when it'll grow to be those millions of dollars. So everything I did was in retirement accounts, which I'm not super mad at because it's a nice little nest egg that I don't have to worry about now. But different stages of life have happened where it would have been nice to have a little chunk of that and be able to use that. Things like buying a house, or just even having peace of mind or being able to go on vacations knowing that something like dividends or cash flow were able to help fund those things. My perspective on life has changed a bunch, which it does as you grow a little bit older and wiser. And one of the things for me is time freedom now rather than just later on when I'm a little bit older. Life is precious and we're not promised tomorrow, and so I want to start living a little bit more in the moment and be more present today. Investing for your retirement is important, and I would even say it's crucial. You're gonna need that money, so definitely do that. But I would suggest that you just think about something like mid-term investing rather than long-term investing. And for that, I definitely recommend dividends or a dividend ETF. I put together this video that goes over all the different pieces of information that you need to know about dividends and what you need to know to be able to get over $1,000 passive income every single month in the near future rather than way down in retirement age, so that you can start living the life that you want to the fullest now.